Hey everyone, welcome back to Corporate Decoder, the place where we dissect those dense corporate filings so you don't have to. Today we're diving into Great Lakes Dredge and Dock's latest report. It's a quarterly update, so buckle up, because even though it sounds dull, there's some juicy stuff about debt and a big bet on offshore wind, and some possible concerns we'll get into. This report shows Great Lakes had a pretty good quarter. But a key project may be facing delays. How will that play out? Before we get started, if you like getting clear information from these corporate documents, be sure to subscribe. We also have a Discord community linked in the description below. Join to discuss those reports with others. Okay, let's get into the numbers, starting with a quick look at their balance sheet. Basically a snapshot of what they own and owe. Looking at the balance sheet, it presents a view of the company's assets, liabilities, and equity at a specific point in time. And their total assets are at $123 billion, slightly down from the end of last year. Total liabilities are at $753 million, also down. That means the company has more assets than debt. It's like having a larger house than your mortgage, which is generally a good sign. And equity, which is basically the ownership stake, increased from the end of last year to $79 million of last year. Total liabilities are at $753 million, also down. That means the company has more assets than debt. It's like having a larger house than your mortgage, which is generally a good sign. Equity, which is basically the ownership stake, increased from the end of last year to 473, which is basically the ownership stake, increased from the end of last year to 473, which is basically the ownership stake. Let's focus on the accounts receivable, the money owed to the company but not yet collected. It sits at $113 million, down slightly from the end of last year. It's like a stack of unpaid invoices. It means the company is selling services and generating revenue, but that money didn't hit their bank account yet. Moving on to the income statement, which shows how profitable the company was. Let's look at a couple of key numbers. TAT. The report says the company's contract revenues were $242 million, up from $128 million the previous year, like saying they sold more product. Their net income, which is the profit after all expenses, was $33 million, up from $21 million in the same period last year. This means the company is making more money and keeping more of it. This indicates a positive trend for Great Lakes. Now let's quickly check the earnings per share. This shows how much profit is allocated to each share of the company's stock. The basic earnings per share is at 50 cents, up from 32 cents the previous year. So it's like saying that each slice of the company's ownership pie is now worth more. This is another good sign. Now, onto the cash flow statement, which tracks how much cash the company generated and spent. Cash from operations, which is from its business activities, was $60 million, up from $38 million the prior year. It's like saying the company is better at collecting its payments, and as such, it can invest in the business. This bodes well for future expansion, but we still need to look at how it will use that cash. The report says their net income or profit was $33.4 million compared to $21 million the year before. This is great. It's the actual profit after all expenses and taxes. Here's something a bit technical but important. It says net change in cash flow derivative hedges. Essentially, they're using financial tools called derivatives to protect themselves from fuel price spikes. And those derivatives are currently adding $362,000 to their income. It's like having an insurance policy. It makes the earnings a little more predictable. Here's another one, share-based compensation, meaning that they gave away shares as part of compensation. That's roughly $750,000. It's like rewarding people with company ownership rather than cash. Now let's scroll to the liabilities and discuss the debt. Long-term debt is a big one here. It sits at $413 million. Big debt is like having a big mortgage. It can be manageable as long as you have a steady income stream. The company spent almost $2 million in share-based compensation. Now let's find out about the share repurchase program. So the company repurchased about 350,000 of its own shares for $3.2 million. It's like the company is saying the stock is undervalued and is buying some back to boost the share price, but it requires using money that could be allocated to other things. Now, about the future, the company mentioned something called the Water Resources Development Act. These acts are pieces of legislation that authorize federal money for, among other things, dredging of US rivers and channels. Because federal contracts make up a huge proportion of Great Lakes Dredge and Dock's revenue, any such authorization act are very good news for the company's backlog. Here's a big one though. The report mentions that a key offshore wind project, Empire Wind 1, is facing a temporary pause. This is significant because Great Lakes is banking big on these types of projects. Any delays could hurt the company's revenue projections and possibly call into question their new strategic direction. It's like having a major client put a big order on hold. You still have to pay fixed costs while making less money. One last point, cash used in financing activities was 39 million compared to only 30 million last year. It would be things like paying debt or buying their own stock. It means they either took on more debt or are using resources for something. They recently announced a $50 million share repurchase program. Essentially, this means they are going to buy up to $50 million of their own stock. These buybacks can increase the stock price. So what's the story here? Great Lakes had a strong quarter. Revenues are up, profits are up. There's a dark cloud. Delays in key offshore wind projects could affect growth plans. The share repurchase suggests the company is confident in its stock value, but are there better uses for that cash given the risks in the offshore energy market? The strength of this company lies in the core dredging business, the bread and butter. It is consistent with the company's history and expertise. The risk lies in the dependence on major government contracts and now this potential uncertainty in the offshore wind sector. The major opportunities are more government spending and successfully diversifying in areas outside of offshore wind given recent potential complications in the market. So, the company is navigating well, but will need to show it can roll with some punches given the offshore wind segment. Alright, that was a look at Great Lakes Dredge and Dock Corporation's filing. What do you think? Is this a company set to sail smoothly, or are there storms ahead? Let me know your thoughts in the comments. If you found this analysis helpful, hit that like button and subscribe for more straight to the point insights. Join our Discord in the description, and thanks for watching.